All right, so our recording is on. Wonderful, wonderful. Okay, guys, so once again, good evening, everyone. Welcome to this evening's class. This evening, we'll be doing what is an order block. Okay, does anyone know what an order block is? If you know what an order block is, just give me a yes in the chat box. Okay, Ken says yes. Anyone else? Ken, I noticed that you're logged in twice. So if you are hearing an echo by any chance, just know you would need to close out maybe one of those instances. Okay, just in case it's a situation where you're logged in twice from the same location. Oh, you're on your phone and desktop. Okay. All right. Okay, so anyone else knows what an order block is? No one else? All right. So basically, an order block is where market makers are accumulating positions. Okay, so someone just name an instrument. I'm on Euro USD. Normally I'm on Euro USD, but you guys can name another instrument. Try to keep it within the European and US session. So make it one of those pairs that are within the European and or US session. Okay. I normally trade around those times, so those are pairs I like to stick with. Euro USD. Okay, Euro USD is good. All right, so here we are on Euro USD, and I brought us over to the 4-hour time frame. The reason why I brought us over to the 4-hour time frame, it's because we want to look for these very strong moves in price, because these strong moves in price give us an idea of where the market makers have a lot of interest in price. Okay, so it shows us where they have a lot of interest because they move the price very aggressive in those areas. All right, so an order block. An order block, as I said, is basically an area where market makers are accumulating positions. All right, so what you want to look for to locate an order block is, for example, you want to look for, let's just move, let's just move over to a random area, right? We're going to move, let's say around here. This is, what date is this? This is around July 30th. Yeah, so this is around July 30th. Good. Yes, Jeremy says this is related to smart money trading, correct? Yes, this is related to smart money trading, right? So when Jeremy says smart money, he's basically referring to market makers, right? So what you're going to look for is a strong move. So if this is a strong move down, so it's trending up, price is trending up, and you're going to look for a strong move down. So once you find a strong move down, what you're going to look for is the last up candle, because the last move, the last trend was to the upside. So you're going to look for the last up candle. Okay, so I'm going to use a rectangle to represent the block. So I'm going to create this range over the last up candle. So this would be the last up candle, and I'm going to try to do it from body to wick or wick to wick. There you go. Okay, so this range here, this block represents an order block. Okay, this is what's telling you that there are a lot of orders in this area to go short. Okay, so there is a lot of orders in this area to go short. All right, and as you can see, the price pushed aggressively out of that area. So every time price comes back into that area, as you can see here, it is being rejected, rejected, rejected. Okay, so the market makers are looking at this area as a very strong area of interest, okay, to go short. Now, we want to look at the areas where we find strong moves because it shows kind of how much interest they have in that area. So you want to look at areas where they have a lot of interest. okay? Which means that the price is going to be moving very aggressive in those areas, all right? Now, we're on the 4-hour time frame, and generally I trade on the 1-hour time frame. So if I'm looking at getting involved with trading order blocks, I'd be wanting to look for maybe the 4-hour order blocks, and I'm going to trade them on the 1-hour time frame, okay? However, tonight, we're not going to be focused on actually taking trades. We're going to be focused on how to locate order blocks. Just give you guys some examples of what order blocks look like, all right? In maybe some of our later classes, we'll go into it in more detail, all right? So here we have it. We have our first order block located, and this is showing us that this is a bearish order block, okay? Meaning that once the price comes here, it's going to be looking to push down aggressively. So here you can see the price did push down aggressively. We located our order block, and you can see price came back into that area, pushed out of it. Came back into that area, pushed out of it. Came back into that area, pushed out of it. Okay, great. So here we can see price continues moving down. Now, where can we expect the price to go down to? Normally, the price will move from order block to order block, okay? So normally it's going to move from order block to order block. So we want to be able to know or have an idea where is the next possible order block that the price could stop at. All right, so let's see here. Price pushes down, it pushes up. So in an area like this, where it pushes up, we can look at the last down candle before the move up. Now, this is going to be more of a weaker move, right? This is going to be more of a weaker move. And this move does not necessarily give you much of a strong move out of it, right? So we're going to look for where the price can potentially stop. So the price is coming down. Look at all of this here as price making that down move. And the price is coming down. It's not going to be moving in a straight line. It's coming down, up, down, up, down. And over here, if you look to the left, you can see this is the move up, right? So you're going to look for the last down candle in the move up, okay? So let's see here. Let's bring on our rectangle tool. So the last down candle is here. Right here, right? I think I got this next to perfect. And you can see here that the price came down and hit this order block, right? So the price came down and hit this order block. And when it hit this order block, you can see here that it stalled out, okay? Now the price tends to move from order block to order block. So when the price comes down and hits this order block and stalls out, you want to know what is the possibility that can happen. So it's going to bring us back to the previous order block. So we got to move up here, right? So this was a down move, strong down move. Then you got to move up. This move up was a little bit more on the weak side. So you're going to look for the last down candle in the move up. Okay. So we can look at this one here. This is the stronger move up. So we can look for the last down candle in this area. And the last down candle in that area would be this one here. Right? Good. Looks like this. Good. So you can see here that the price came to this order block, bounced off it, back to this order block area here, and continued pushing down through the last order block. So every time price comes and hits an order block, it somewhat invalidates that order block, which means that that order block no longer carries much strength. Okay. So as you can see here, the price came down, came back up, came down, got to this order block, which is this one over here, got to that order block, went back to the upside, small retracement, into this order block right here. So now it means that this order block was hit, it's no longer valid. This order block here was hit, it's no longer valid. So when the price came down and hit this order block is no longer valid. So if you had to take, let's say you were in a sell trade and you wanted to take profit, you would have taken profit in this area. Price pushes up into this order block right here. If you wanted to go short again, you can go short again in this area. Okay, so price now pushes down, breaks this previous order block because it was already hit. So now it's no longer valid. Okay, so price pushes through it. Where is price potentially going to stop again? So we have to look for the next order block. So you look to the left. And where can the next potential order block be? So the next potential order block can be, we're looking for the strong move up. So let's see here. What do we have? We have price still coming down here. Price pushing to the upside. Last down candle before price went up. So this one here could be the last down candle right here. This is the last down candle before the price went up. So this is potentially our next order block area right here. Okay, so you can see that the price came down into that order block and made its way back to the upside. Okay, give a little retracement. Okay, now here you can see as well that this move to the upside, right? This move right here to the upside, you can see that the price came right back to it. If you look at this, the price came right back in that area right here before pushing down some more. Okay, so it basically came below the order block and came back, rejected off that order block and continued moving to the downside. So this order block, since it was broken and retested, it is no longer valid. Okay, so this order block broken, retested, no longer valid. So since price is bouncing off this order block, where can price now potentially stop again? We now have to check. If you look to the left, let's see if we can shrink this a bit. Okay, we'd have to go way far to the left if we'd like to find that next potential order block. But if you're not able to find one, all you'd have to do is just wait for the setup to reset. So in a case where we'd be looking to see if this setup is going to reset, all you have to do is look for the next strong move up. So here you got another strong move up. Okay, and look what's happening over here. Price is retesting this area. Okay, so you got the move up. Last down candle would be here. All right, so the last down candle would be here. And you can see here that price came right back to this area and bounced off it. Okay, so this order block here is no longer valid. So that means that the price can go through it now. All right, so price came down. As you can see, it bounced off this area over here as well. So this is another area where we have another order block. But these are more of, so price last down candle is here. Okay, so these are more smaller order blocks. But what we want to look for is more of the bigger order blocks, the stronger ones. So These kind of help us to be able to map out price, how price is actually going to move, how it's going to unfold. But what we really want to look for is where we can catch these nice big moves. Okay, so here you can see that we're getting a strong move up. So this area here would be a lovely area of interest, right? Right here. So the price moves up, bounces back on this previous order block. It comes back to this area here, comes back to this order block, bounces off it, and makes a strong move to the upside, as you can see here. Because as you can see, we got a strong push out. Once it came back, retested this order block, you get another strong push out. Okay. So this is the significance of the order block. And if we understand order blocks, we understand how to trade these order blocks, which order blocks would carry substantial, how can I say, substantial value, then it would help us in our trading a great deal. Okay. Do you guys have any questions so far? Jeremy, you basically asked if this was related to smart money trading. Let us know a little bit of what you know about smart money trading. You seem to have a little bit of knowledge. Anyone else with any questions? Feel free, go ahead, drop your questions. Whilst you guys are putting your questions together, let's summarize what an order block is. So if you're looking at your chart, let's remove some of these order blocks. Just want to leave one on. Okay, just want to leave one on. Okay, let's leave this one. So this was the up move, and we're looking for the last up candle before the down move. Okay, so this would become a bearish order block. So in an up move, the last up candle before the down move creates a bearish order block. In a down move, so let's say the price is trending downward, you're looking for the last down candle before the up move to create the bullish order block. Okay. All right. Ken says, does it make sense to identify a order block on a higher time frame, but refine it to the lower time frame? Yes. If you locate your order blocks on the higher time frame, for example, you don't need to go all the way to a daily, but if you can go to at least the 4-hour time frame, if we went to a daily, it would look like this. Right, so daily order block would look like this. And here you can see the price came back to that area right here and down. Okay. Make sense? Came back here, down. Let's go back to the 4-hour, and I'll try to extend that. Okay, I hope I didn't mess it up too much. Okay, good. So here you can see this 4-hour order block on the daily time frame. As you can see, the price came back to this area here and it went down. Okay. So it does play a role if you had to go to the 1-hour time frame. So we're going to drop down to the 1-hour time frame. And here we go. So we got our order block on the 4-hour time frame. So we're looking at this area here. So somewhere inside of this area, we're going to be looking for price to start making its way to the downside. Okay, so you can see these vertical lines that I have here. This is based on my sniper entries method. And here you can see this is basically 2 a.m. This is 5 a.m. This is 8 a.m. These are Eastern Standard Times. Okay. Based on the GMT2, I believe we're on right now with MT4. This is 9 a.m. this is 12, and this is 1500 hours, right? So these are basically 2 a.m., 5 a.m. and 8 a.m. So these lines are on those times. And the reason why I have these lines on these times is because this is the open of the London session, this is the lunch time, and this is the open of the US session, okay? And these times basically mark where a lot of volatility comes into the market, okay? So these times mark where a lot of volatility comes into the market. And if you look at this order block right here, just this part of it on this day, just this day, just where you have the open of the London to the open of the US session, you can see that there is a lot of volatility in this area, okay? And generally you will get volatility until around 12 p.m. Eastern Standard. And let's just see here. This is 12 p.m. Eastern Standard, 1900 hours. Right here, this is 12 p.m. Eastern Standard. Okay, so you can see we got a lot of volatility from the open to 12 p.m. Eastern Standard. All right, so basically this area right here had a lot of volatility, and this area right here on the 4-hour time frame is an order block. So this was the last up move. This is where they accumulated buyers to go short. Okay, so they accumulated all of these buyers so that they can go short. All right, and notice how aggressive they went short. They went short very aggressive. And this is most likely because this level here would be where a lot of stops would be placed. So they just simply come back and take out all of these buyers, right? Stop them out, create liquidity. Okay. So if I'm looking to basically go short off of this order block, which is from a higher time frame, once I see the price comes back into it, I'm going to look for a reason to sell. Okay, so whatever your whatever patterns you look for, whether it's candlestick formations, whether it be harmonics, whether it be whatever it is that you're looking at, this area, this zone would make for a lovely area to look for your triggers, okay, your reasons to sell, to go short. All right. If you're looking at trend, let's say you're one of those trend traders and you're looking at this area here, you want to trend this move. So if this is your trend and you're looking for the break of it, then here you can see you have a trend break, you have a retest, you sell, you get a nice move. Okay, and on the 1-hour time frame, you may want to look at, you know, other smaller order blocks, because if you're trading on the 1-hour time frame, then you're most likely going to be a day trader. So you're not always going to get gigantic moves throughout the course of the day. You're going to have to try to trade from order block to order block. Okay. All right, let's see here. Jeremy asked a question here. Yes, I've learned a little. Do you ever look at the imbalance for a potential reversal? Okay, well, generally the strong move is what is looked at as the imbalance. And I look at it a little bit different because I'm from more of an Elliott wave point of view. Right? So I look at the impulses and I'm like, this impulse is telling me that the price wants to go to the downside, right? So since we have this strong impulse, I'm just simply looking for the correction. So I'm looking for the correction to the order block, right? So it corrects to the order block. I'm looking for a reason to sell again. Okay. So here we have another strong move. It corrects again. I'm looking for another reason to sell. And if I look at the smaller order blocks, then this one here, last up candle before the down move, would be something like this, if I'm drawing this correct, right? So in this area, that's where I'm looking for my sell over here, right? And if I had to remove this one, and if I had to look at this one here, so this is where I'm getting my retracement. This is the 4-hour order block. If I want to look for the 1-hour order block, I'm looking for the last up candle before the down move, right? So the last up candle before the down move. So I'll be looking at this one here, right here. Yeah, so order blocks within order blocks, and this would be my area of interest right here. Okay, however, I'm jumping the gun a bit. I'm jumping the gun a bit. I'm getting too excited. We're going too far into the class. We're gonna leave these for our next class. This is where we're gonna go a little deeper and look at how we're gonna look for setups, you know, throughout the course of the day. But the main idea of today's class is that we are able to identify order blocks. Okay, so the last up candle before the down move is the bearish order block. The last down candle before the up move is the bullish order block. Okay, now here's another example. This is the last down candle before the up move. So if I was to use this, this is the order block right here. See this? And look what happens. After coming from this order block, we came to this one and bounced off it again. Okay, then we came from this one, we went back to the next order block, which is the last up candle before the down move, which is here, right? Bounced off that again. Okay, so that's basically how the price moves. Okay, and here, if you're looking at the price coming down, you're looking at the last down candle before the up move, and we can look at, we can actually look at this one right here, right? Look at that. I want to bring it too far. Right here is good. There you go. See that? The price came right back to that order block. Okay. And if you want to go even further, this is where it stopped. And here it's pulling back. Where is it going to be pulling back to? This is the down move here. Look for the last down candle before the up move. It's going to be right here. Right in this area right here. However, this one did violate a little bit. It did go a little bit further, right? But all of these are basically a cluster of order blocks, which kind of says that the price is extremely bearish because we have a lot of order blocks in this area, which means that there's a lot of selling pressure. Okay, there's a lot of selling pressure. So this would make a lovely area for shorts. If you're looking at shorts on an intraday basis, or if you're looking at a short from a swing trading point of view, this is the area from the swing trading point of view, this 4-hour order block, this is where you want to execute your trade to go short. So that's a very strong order block for a swing trade. We'll look at order blocks from a day trading point of view. Yes, you can look at it from the higher time frame perspective, and then you break it down into smaller order blocks, and you can basically take your day trades off that. Okay. Any other questions? Drop your questions, guys. Jeremy, what about you? Any other questions? Ken, what about you? Grace, have you asked the question yet? Regina, what about you? Just giving you guys a few seconds to type up your questions. I see Kelvin just joined us. Welcome, welcome, Kelvin. You're joining us late. Kelvin, this evening we're doing order blocks. You're a bit late, but you can always catch the recording. But however, since you're here with us, have you ever come across order blocks? Oh, okay, okay. Regina says she was driving, trying to watch whilst driving. Be careful, Regina, be careful. Okay. Okay, okay. Just be careful. No need to answer any questions since you're driving. All right. Kelvin says hello. You're most welcome, Kelvin. Hello, hello. Let's see, let's see. Ken says, if the bear candle doesn't break structure after the last up candle, should that still be used as a start of the order block? If the bear candle doesn't break structure. Okay. Give me an example of what you're speaking of. Show me the area that you're talking about so that I can reference this. Just give me maybe a time and date, since I assume we're looking at the same area. My order block at the top. Let me remove these little order blocks. I'm just going to remove them. Oops. Removed the major one. Okay. Go back to the 4-hour. Where was I? I think this is where it was, right? Last up candle before the down move. But I think that was it right there. We went to the 1-hour time frame. There we go. Right. Okay. So July 30th. It's right here. Okay. Ken says that the bear candle didn't break previous low. The bear candle didn't break previous low. Open of bull candle, which wouldn't technically show bearish intent. Or am I thinking too much about it? Okay, yeah, 2 candles to the left. Where cursor is. Okay, 2 candles to the left. Okay, so you're saying that the bearish move did not break previous structure. Wouldn't this be what you consider to be previous structure right here? Right? Wouldn't this be an area where you consider, let me see here, let me just use a horizontal line. Wouldn't you consider this to be previous structure? He says that's not where I was looking. I was only referring to the low of the previous candle. So maybe structure isn't the term of it. Okay. All right. So when you say previous structure, you see the price is kind of stalling out in this area right here. So this is what would be referred to as structure, right? It all depends on how you're looking at the market, right? Because many things determine how the price looks. So basically this, I'm just going to use horizontal lines, right? So this would be an area of structure right inside here. So this is an area of structure. Okay, is this an example of what you're talking about, Ken? An area of structure right here? Yes, good. So if you're looking at an area of structure and you're looking for a break of an area of structure, this is a break right here. Price broke that area of structure, right? So if price breaks that area of structure, which is where the stops would be placed below this area right here, you can see this is where they basically accumulated those stops. Yeah, here's another area of structure right here. And here you can see they accumulated those stops with this little spike to the downside right here, right? Okay, let me try to read these comments here. Okay. So to make the order block valid, does it require a break of structure to confirm bearish or bullish intent? Okay, some traders would look at it and say that it needs to break an area of structure to confirm bearish intent. But what I would say is breaking an area of structure is more a sign of confirmation, okay? It all depends on when you look at your chart, because you could be looking at your chart and that area of structure is not broken yet, okay? Sometimes the day could end and the area of structure is not broken. The next day, the area of structure could get broken, okay? When that area of structure, like this area here, gets broken, then you're going to be looking for, some sort of retracement, because you know that they just accumulated the stops of the buyers here, and now they're going to start pushing the price up again to, get a better price. Okay, you drop down to the maybe you can drop down to a lower time frame, or you can use an order block from the 1 hour time frame, and you can look for an area where they're going to, have some interest to go short again. Okay. So a breakup structure is more like it will give you confirmation that, they are indeed potentially looking to continue to the downside because they just accumulated the stops of the buyers. So by taking out the buyers, then the sellers will basically take the lead. Okay. Is that clear? Any other questions? Let's see if we can look at another area here. Let's try to make this a bit smaller. Let's look at that area of structure, right? Look at this area of structure here that we spoke of, and look at this. Look at that. You see how that area is basically being respected in the past? Let's look at that. Very, very strong area. Very strong. So you can see that this indeed was an area of interest. Okay, it did. If you're looking at traditional support and resistance, then you can see that this indeed was an area of interest. Okay. So with that area getting violated, it would mean something. Okay, it would mean that there is some sort of interest to the downside. Okay, if that area was not violated, then it could mean that they could be propping price back to the upside. But then if the price did not go down and continued going up, then you'd have to, wait for some sort of retest of this order block. And if price came back and retested this order block, then you'd be looking for more upside. Okay. All right. I see Ken says got it. Wonderful. So without getting this break here, it would kind of tell you that the buyers could still be in control, right? However, when we looked at the market, we looked at it from the 4-hour point of view, and from hindsight, let's make it a little bigger. From hindsight, we're just looking at all of this move to the downside, right? We didn't look at it like this. We didn't look at it like that, or we didn't look at it like this, okay? In real time, it may look like this at the time that you look at your chart. So the time that you look at your chart, you will see that price didn't break that area of structure, right? And then you're going to have to make a decision at that point. So you're going to have to make a decision of whether you want to go long or whether you want to wait for a break of that structure so that you can look for short interest, right? So if you prematurely went long, this is what would happen to you. Because remember, it's an uptrend. As of now, it's still an uptrend. Okay, so with us getting this red bar, it doesn't necessarily mean that the market's moving down, right? This could simply just be a red bar, just like all of these other red bars over here, like this one, and the market continued moving up, right? As you can see, got a red bar here, market went up. Red bar here, market went up. Red bar here, market could continue going up. All right. So at that point, you need to understand what you're going to do. Are you going to be looking at buying, or are you going to be looking at selling? And in a case like that, what I would say is it's normally best to wait. So you'd wait, and if the price does go up, closes above, comes back and retested this block, then I would say, okay, that's my cue. I can look at this as long interest. We're continuing to go long, okay, because it broke the high. So it's most likely we're going to continue going long. So if everyone who looked at going short after they saw this big bearish move and they entered short trades around here, their stops are going to be here. So if the price comes up and breaks that high, then we're accumulating all of these sellers here because they're getting stopped out. So that means that buying interest or buying pressure is going to become elevated. So we're going to be looking for more upside. Okay. However, price broke that area of structure. So because price broke that area of structure, we can say, okay, then all of the stops that were placed down here for this buy were hit, right? So most stops in this area would have been taken out. Okay, so they push the price down to take out those stops. Once they're able to take out those stops, they're going to try, they took out the buyers, so they're going to try, bringing the price back up, trying to get a better price. And with them bringing the price back to the upside, trying to get a better price, if we're looking at this, looking for a nice entry in a lower time frame, like the 1 hour time frame, then on the 1 hour time frame, we can look for the 1 hour order block. Okay, so last up move before the down move, this would be a nice 1 hour order block right here. So when the price comes and hits that 1 hour order block, I can look to go short. Right, so that's my first attempt to go short. And if I go short here, my stop goes above this order block. Right, the big order block, my stop goes above the big order block. So I go short. If I'm a day trader, I'm only going, for basically a few pips, for the day. So I need to find myself a target. So what target am I going to use? This is the down move, the last down candle before the up move. It's going to be this one, last down candle before the up move, right here. Right? So my sell setup as a day trader, this is my profit target right here. Okay, so I'll be able to close my trade in that area, take my profit, walk away. I'm done for the day. Okay. Any questions? All right, Kim says no. Anyone else? All right. Okay, guys. Well, this will bring us to the end of today's class. Thank you very much for coming. On our next class, we'll continue with order blocks. We'll go a little deeper into it. Okay. So thank you so much. I'll see you on our next class. Bye-bye for now. I'll see you next time. Have a good evening. Bye-bye, everyone.